Every time you scan an item at the grocery store, buy a new pair of shoes, or pick up a replacement charger for your phone, you are paying significantly more than you were just a short time ago. People are noticing this friction in their daily lives. 63% of Americans now explicitly oppose the trade policies driving these constant price hikes. When we think about government spending, we usually picture the traditional federal budget, agencies, grants, and programs. But there is a secondary, hidden ledger dictated entirely by recent executive policy decisions. This chart breaks down the combined macroeconomic consequence of those choices. When you add up the fallout, you are looking at approximately $373 billion in total economic damage. That massive number doesn't stay trapped in Washington. Divided out, it functions as a mandatory $2,784 tax bill handed directly to the average American household. The first major entry on this hidden receipt comes from trade policy. The initial pitch for aggressive tariffs was straightforward: impose fees on foreign goods to protect American manufacturing jobs. But modern manufacturing relies heavily on global supply chains. Because almost every consumer product contains some imported component, placing a tariff on those imports creates a universal tax that gets passed down through the entire supply chain. The macroeconomic result is severe. Projections for 2025 alone show an estimated $180 billion loss in the U.S. gross domestic product, directly linked to these trade restrictions. For the people buying those goods, that translates to approximately $2,000 in extra annual living costs per household. This $2,000 annual surcharge functions as an unavoidable direct tax on basic survival, regardless of the policy's stated intent to protect domestic industry. The second major cost center stems from foreign policy, specifically the decision to rapidly escalate military intervention in the Middle East and surrounding regions, including tensions with Iran. The upfront government expenditure for maintaining and operating these extended military operations sits at over $72 billion. That upfront cost is only half the equation. When geopolitical conflict erupts in oil-producing regions, the resulting supply chain panic creates immediate price spikes for essential commodities like gas and food, costing the average family an extra $1,000 per year. This chart shows the full scope of that conflict-driven debt. When you combine the $72 billion in direct military spending with the $62 billion drained from families via domestic inflation, the total economic damage reaches $134 billion. Pinpointing the household impact, this specific foreign escalation adds an estimated $1,000 burden per family. Economic damage also takes the form of expected revenue that simply never arrives, specifically in the collapse of international tourism. By 2025, the number of international visitors to America dropped by 4 million people. Canadian visits alone fell by a sharp 22%. When those crowds vanish, the economic fallout hits immediately. Hotels lose their bookings, independent restaurants lose reliable foot traffic, and small towns that depend heavily on seasonal influxes lose their primary economic engine. Zooming out to the national level, this sudden drop in visitation creates an $8.4 billion void in lost tourist spending. With that external cash flow cut off, local municipalities still have to pave roads and keep the lights on. That means domestic taxpayers and struggling small businesses are forced to shoulder a heavier financial burden just to keep their communities solvent. This finalized receipt brings the whole picture into focus. Between the trade wars, the military escalation, and the sudden drop in tourism, the total hidden ledger reaches that $373 billion mark. To understand the real weight of that number, we have to look at opportunity cost. The $134 billion drained by Middle Eastern conflicts represents money that completely vanished from the American economy. That exact capital could have been deployed here at home to overhaul deteriorating interstate highways and local infrastructure. It could have been allocated to public school systems, replacing outdated materials and fully funding essential educational programs. Instead, that wealth went to uncertain military operations abroad, leaving domestic families to struggle with rising housing costs and stagnant local economies. The ultimate answer to where your tax dollars go is found at the grocery checkout and the gas pump, a finalized $2,784 hidden tax bill handed to every American household to pay for geopolitical decisions.
Join the 100M movement, and let's do extraordinary together.